The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the March 22nd Turnaround Tuesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. Of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go look at the circumstance of the bulls and the bears, the buyers and the sellers. We're going to go figure out what they're communicating to you and I at just past 1 o'clock in the afternoon. I want to tell you that I'm grateful for your presence here, but more importantly, I'm here to serve you. So feel free to pick up that phone at any time and dial on in at 877-927-6648. Internationally, 727-445-1044. Let's go ahead and get this terrific Tuesday. Of course, with it's hard to really call it a terrific Tuesday with everything going on over in Belgium out there. But let's go ahead and get this Turnaround Tuesday edition of this show off. Of course, this is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, we have the Dow up $21. The S&P is up 4. NASDAQ Composite up $21 as well. Russell 2000 up just about a 1.5. Gold's up $3. Silver's down a penny. Light sweet crude is off about 9 cents right now. So we've got flat markets there. Lead the charge here to the upside, painting the town green. You've got Sherwin-Williams. They're the leader dollar-wise, up $10. Chipotle's up $9.50. Regeneron Pharmaceuticals up $8. Allergan up 7. Amazon up about 8. The IBB itself, where is that? That's up $6, about 2.5%. Priceline is the leader to the downside, off $35. Travel related, that would make a lot of sense, right? Makes sense to me. I Apparel Group, that's down 17%, off $9. Credit Acceptance Corp seems like they like to just go ahead and keep that placeholder to the downside out here, off for another $5 as we speak right now. Mattress Firm, MFRM, off about 11%, down $4. But first, we must start with regard to many people are perplexed. You've got terrorist incidents over in Europe, and many people may have woke. Well, not woke. I guess I don't know. It was right around 8 o'clock or so. May have happened. I don't know the exact timing of everything. I actually wasn't focused on the boob tube or anything until after I got my newsletter out, and then I turned it on and said, "Oh, that's interesting." Why would I say that's interesting? Most people would think when you see these types of European or any kind of, quite frankly, these days, any kind of incident overseas, terrorist incident, that's going to go ahead and crater the markets. Now, you saw the initial response, which was really, you saw gold move up by what, 10 or 11 bucks out there. So that's normal and that's natural. And hey, with regard to my viewpoint on gold, it doesn't take into account a terrorist action. But today's actual if we watch gold, it was up 11. It's now up about 4 points out there. It can't hold on to any of its gains, in essence, in situations like this. It just adds to the conclusion there that gold's going to get smacked down. But let's come back to first the markets out here with regard to its behavior, because not at all unusual. I posted this in the den earlier this morning. I'll go ahead and put a couple charts up on the screen. Easier because people like to look at actual data and facts out here. And over the course of the last 10 years, let's go ahead and from this slide out here. So this slide here, by the way, this is the S&P futures contract that I've got it on. But if we go back to 2004, looks like right around the March timeframe of 2004, and these happen to be, the reason why I've got these charts is remember when we had the last well, we had the Paris bombing situation. I had a client, and that was a Sunday. Well, it was Friday. Friday at about 6 o'clock when that occurred. Sunday, the futures opened lower, opened up sizably lower, and I had a client that was on or believed that he was on the wrong side of the market out there, and so I got the call Sunday. Evening around after the futures had opened, 6:30, 7 o'clock at night. What should I do? What should I do? And the nice thing was I was able to supply him with this set of charts here to say, actually, this is the time to buy the market. That if we take a look at history, if you believe that patterns repeat over and over again, and there were other patterns that were just coincidentally, if you believe in coincidences out there, that we're actually making bottoming patterns out here. And we know that when we go take a look at the charts there, we know that I think it was like around November 13th, 14th, 15th, sometime right around that time frame. Was that Friday or that weekend when that actually occurred? But look, this first chart out here on the screen. So that's why I've got access to these charts. I couldn't find. I should really save this data so I can go back because I've got a chart here that deals with wars as well, and the uniqueness of how the market responds there. But here's the Madrid bombing. Back here on the left-hand portion of my screen, if you're watching it, you can see that the market stabilized here for several days. Okay, so, it's not like the market cratered. Here's the suicide bomb attacks in central London. I can see I spelled London wrong out there, London. But here's, and you can see how the markets moved higher from there. Here is, now, even though this was not necessarily well, you've got the downing of that Malaysian Airlines Flight 17 that was shot down over the Ukraine out here. This is back in 2014. That did not create the markets. The markets actually moved higher. You've got I don't have all of the attacks out here. I've got most of the major ones. Today, I think will also be a major. You got the Charlie Hebdo attack out here, right? What did the markets do? They moved higher for a few days, formed this little triple bottom area out here. Why can I say that? I could actually say quadruple, but we'll call it a triple bottom because we know that the swing points were eventually taken out to the upside. So you can see how the market went ahead and responded. You can see here is recently when the Russian plane was shot down over Egypt. However, that went down, right? You can see that the markets didn't fall apart. In fact, the markets rallied and moved higher for a few days. And here's that Paris attacks. Now, we go back to actually take a look at the chart. So this is the ES Mini. Let me put up the continuous contract out here. I don't remember the exact date, but maybe somebody in the den might know. I think it was around, I know it was November, and I'm pretty sure it was around the 14th, 15th. We probably can identify that out here in the charts. Where is it? Where is it? November 13th, 2015. Thank you, Z. Appreciate that. So let's go take a look at November 13th, 2015. Here we go. So right here, so it took place on Friday after the markets closed. Here was November 16th, where the market just simply continued to move higher for many days to come. Made a little test of its prior swing point out here. Now, that's just with regard to today's activity, right? So today's activity, what do we know? In fact, the CS mini chart here, we know that price is above resistance zones of that declining tops line out there. So when you see these, look, I've just given you a piece of information. It's almost a matter of trying to find where's the intraday bottom to play to the upside, as opposed to believing somehow that the markets are going to go ahead and crater as a result of this. Why? There's all kinds of theories out here. Do we really need to know why? Is the why the important, or is the result in this case here when we are trading and investing the important thing? And it doesn't mean that it's going to work 100% of the time, but what I can tell you is you go take a look at these incidents out here, and guess what? It's worked 100% of the time over the course of the last 10 years out here. So I believe we're going to break. Just hearing the music. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee.
See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So Dow's up 11 points, S&P's up 3, NASDAQ Composite is up 20. Let's take a look at some potential areas of support and resistance out here inside of the futures contracts. Let's also try to get a gauge as to what's going on in the market. So I'm going to look at the ES Mini. Since we had the ES Mini chart up on our screen there, taking a look at these incidents over in Europe and what's taken place when the terrorist attack, at least with regard to the financial markets. Now, inside the ES Mini, this is a 120-minute time frame. Let me just hit my refresh button, make sure that the market profiles are correct out here. So on the 2-hour chart, what we can see here is we can see that price right now is above a resistance area, the top of that TAS market profile, which is up at the 2,046 and 3 ticks, 0.75 level out there. This 2-hour time frame here began at noon. So when this show is over at 2 o'clock, if price is above that, we will have price above a resistance level, which is important during this market profile because as it formed, it also formed a lower low out here. Now, what does that mean? Lower than the previous low. That says that 2030 0.25 is the number, is where we really ought to be able to find where the ES Mini ought to be able to find support in case it just decides to buck the trend of the past 10 years out there and decide to move south. So that should be a good level of support. But what we know right now in the ES Mini is it is above resistance. So that's the 2-hour chart. If I look at a 5-hour chart out here for the ES Mini, well, it's level of resistance at top is 2,043 and a quarter out here. You're above that. The 2-hour chart says that should have been pretty significant resistance out here. So closing above that. Now the 5-hour chart, this is not going to complete. Well, this completes also at 2 p.m. So at 2 p.m. it's out here. And remember, old resistance ought to become new support. So if we get a close above it, I'm not talking 2 or 3 ticks or maybe even 8 ticks out here, but we'll just call it let's call it 5 points. A close above 2,043, we'll call 2,000, 48, 49, something like that. That'd be very positive, very bullish out here. We're just looking at the S&P futures. If I go switch over and take a look at the daily, well, the daily shows the weekly point to the daily chart, but I'm taking a look at the green lines going across my screen out here, and the green lines say, hey, closing above 2,046. So I'm glad we added a few points to the levels, and we looked at those intraday charts. So anything above 2,047 would say that the ES Mini is going to make a run for the 2,095 level. Now, that's a pretty big move, right? You're talking about 45 plus points, more than that to the upside. But that would be its message out here. Now, the NQ, as long as we're in the daily time frames out here, right, that has been the equity futures contract that has performed has not performed as well as the Dow and the S&P 500. And today it's above a resistance zone, which would be 44.21. So any close above that, this the daily time frame, says that we should see the NQ continue to move higher into the 45.08 level. That would be its next target, its next level of resistance out here. So as we take, and support, by the way, inside the NQ, just so we make sure that we take a look at both sides of the trade out here, you're looking at 43.32 as a key level of support there. Inside the Dow, let's just go ahead and finish this off here. The Dow, see what kind of message it is providing to us. At this stage, the Dow would do itself a favor from the bullish side to close above 17,552. You close above 17,552, it doesn't assure you, but it almost assures you of a run up to the 17,735 level. So that covers what the markets are doing short term, in essence short term, as we took a look at the 2-hour chart out there and a little bit longer term time frame out there. So good. So we've got that. Does it matter? Let's go see what's going on with regard to, let's go ahead and take this one step further. We don't always do it, but we'll go ahead and do it now. We'll take a look at the ETF structures. As long as we were looking at the ES Mini, let's go look at the SPY out here. And in the case of the SPY, we sort of took a look at this yesterday when we did the S&P 500, right? We took a look at the true double bottom that formed out here back. Now, it didn't confirm that pattern until February 25th, and really confirmed it back on March the 1st. We know when you have a double bottom, you've got a consolidation breakout. In this case, in that way, that gives us that measured move, which we have, which takes you up into the 208 area. We know that you're above the 1 to 1A to B equals CD to the upside inside of the SPY. The A point on this is going to be that low from February 11th. The B point is going to be the high out here from February 22nd. That's at 194.95. You make less than a 50% retracement, just slightly more than a 0.382 retracement. Says that by doing so, that you're likely to go ahead and make more than a 1 to 1A to B equals CD to the upside. Clearly, that is the case. The next level out here is the 1 to 1.272 expansion, that Fibonacci expansion of that C to D leg. Well, where's that going to take you to? The 207 level, 206.95 to be exact, but we're not exact around here. So 207 to 208 would go ahead and complete that measured move inside of the SPY out here. And it looks like that is where she is, or he is headed to. If we look at the Qs out here, volume today about 9.5 million shares. Seems like light volume. Probably is light volume, but we're not going to get too caught up into the volume aspect. I should really turn it on. That might make it easier to actually see what it is doing, what that metric is. But right now today, you've actually had the completion inside of the Qs of that 1 to 1A to B equals CD. That price projection, by the way, coming off that same low out here, the A point was from February the 8th. Your B point out here was on February 22nd. You make just slightly more than a 0.382 retracement. You do that on February 24th. The B point here, which had 23 million shares, was taken out with 37. So the Qs actually had a confirmed A to B equals CD, the upside. Today, you're completing that one-to-one version of it. Really no reason at this stage of the game for the Qs to not make a run up to the 110 area. Now, 110.18 happens to be the top of the gap down Well, it was really a gap down. The top of the gap down was really on the trading session here of January 4th. But I'm using here where the gap is open, the high of January 5th, which is that 110.18. So looks like the Qs are headed up into that level. And of course, we took a look at the NQ on the daily chart out there. And that was telling us at this stage here, right, that price is above resistance as long as the NQ, again, we'll give that number to you, closes about 44.21 and a quarter. It's going to go ahead and make a run to 45.08. So what does that translate into the Qs out here? That it too is going to go ahead and move higher. If we take a look at, that was the SPYs and the Qs, let's go take a look at the Russell 2000 IWM out here as we take a look at it. It's already, a couple days ago, it made the 1 to 1.272 A to B equals CD. It's got some resistance here where it had that downdraft on the trading day of January 4th. Now, there were about 67 million shares to the downside. You can see you're drifting up into that area with light volume. Today, already about 13 million shares. I don't know what it equates to. I know what it doesn't equate to as a day of 67 million shares. So may find some resistance at the 110.83 area. If it closes above that for any reason, then you're looking at a move into the 112.51-ish range. That happens to be the low from December 31st out here. So, yeah, we're talking about December 31st. IWM, right, is all the way back to, in essence, where it was trading at the end of the year. And the Russell 2000 has been the weak link. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow is, let's see here, Dow's up 20 points. S&P is up 4. Let's get to a couple of emails that came in. One asking me about the IBB. That's the biotech sector with inside the NASDAQ. So let's go take a look at this. This listener, viewer, subscriber, the whole 9 yards, is either looking to get in or is in the IBB to the upside out here, and wants to try to identify thoughts on an IBB target. So let's go take a look at it. So first, let's go see what, in fact, the IBB has done out here. Now, you've got a swing point from the trading session of February 9th. It made the low there, 240.03. Let's see, was that the actual low? Yeah, that was. So that's the swing point we're dealing with. That swing point had 3.5 million shares. Now, let's go ahead and draw a line across the top of that little guy. It doesn't matter to us what color line. We'll go ahead and we'll make it green. Come on, work with us. So that's going to give us a price point here of 253.21. We can see we are now above that. Got above it yesterday. And yesterday was a test of that swing area with 2.1, test and rejection of that swing area with 2.1 million shares versus 3.5. So you've gotten a rejection. And even though price had closed inside that swing point, it never tested the bottom. The actual bottom would have been 240.03. The closest you got was to that was 241.85 with, again, 2.8 million shares. So moving into a swing point with light volume. It's now moved out. And the first question is, hey, where's the target? Well, anytime that you reject a swing point or you're into a trade, you're going to look for where's the prior swing. Now, out here, really, the prior swing is not from that long ago. Really, it'd be that long ago. Whoops, get rid of that green line out here. That long ago, meaning you've got a swing point, as small as it is, it's still a swing point, March the 7th. So that's the first place where this is headed to. That says the high is 272.07, low 260.92. Well, you're already 263, right? So you're already trading inside it. Well, is this helping us to identify what's going on from a volume standpoint? The volume on that day of March 7th is about 2.1 million shares, just slightly less than that. You've done 1.6 million shares already. It seems to me that, in fact, the IBB is moving into that area with some volume. So at a minimum, you ought to see the IBB at least test 272.07. I don't know if you're going to, and if you closed above it today with volume, that would be positive. If you don't, it says you're going to go up there and test it, 272.07. Where's the next area of resistance? So as we haven't put any profiles out here, the next area of resistance is, remember, old support can be, when it's broken, can become new resistance, right? So we had the August 24th low. That was out at a price point of 284.16. There were 4.8 million shares down there. You got into that swing point with 11 million shares back on September 28th. That was 11 million going after what? Going after 4, right? Was it 4? Yeah, it was 4.8 million. Then when we came down into it, the most recent time was back here in the middle of January, early January, 3.7 million. You know, it's really finally busted with only about a couple million shares out here. So the next level of resistance inside of the IBB is now going to be that old support line. That's 284.16. Those would be the two target areas that I would be watching. The first one being the high of the swing point from March 7th. Now, let's go ahead and put our market profiles up on the screen. Let's go see what information this can add to that analysis out here and look for levels of support or resistance. Let's go ahead and actually turn off the lines, the horizontal lines that I put in there. We're not interested in those now. And we can see that this is telling us that you should see some fairly significant resistance at both the top of its daily box and the point of control of its weekly level. So that's where we have that blue line and that little dashed green line that says 250.41. No, I'm sorry, 271.18. Sorry about that, but 271.18 to 268.60 really should be resistance. So does that mean that you sell there? No, that means that you should anticipate where you're going to really run into resistance. Again, you're moving into that swing point from March the 7th, doing it with some pretty decent volume out here. We don't know how it's going to end today, but at least through 134, you should have the volume. You close above that. This says that you're going to go ahead and move up to about the 302 level. So really not that far away from the lows of August 24th, which I had listed as 284. So those become your ranges with regard to anyone that's in a long trade inside of the IBB. We had another question that came in that said, can I take a look at, interestingly enough, this one is actually looking at requesting to look at Gilead. Now, Gilead, let's go find out where Gilead is, if it's in the top 10 holdings inside the IBB. So that's kind of timely, if you believe in coincidences. So come on, IBB, why am I not getting any data? Oh, there we go. So now I've got the IBB. Gilead, oh, yeah, I would say it's within the top 10. It's the number 1 holding within inside of this. So that question is, can you advise on what your charts are saying for long entry points in Gilead and MPC? MPC, I don't know if that's if MPC is a biotech or not. But let's just go ahead. We probably are going to find something very similar, right? When you and I take a look at Gilead, because it's number 1 weighting inside the IBB. So now, well, there you go. There you go. So as we take a look at Gilead, apparently I looked at this at some point in time. And what we have out here that Gilead is doing today, let's turn off the profiles, we'll turn them back on. So the little attack, the little war that's going on inside of Gilead is right here at January 25th. Now, January 25th has got a little swing point, a little junior-ish type swing point with 10.1 million shares. Now, you've only done 5 million shares today, so you are testing the top of that level, which is at 93.54, and you're going to do it on light volume. If it closes back below 93.54, then you don't have to really go back up and test that area. If it closes above 93.54, and by the way, right now you're at 93.76, then that would be good news. You close above a swing, even if it's lighter volume or not, then your new target becomes the next real swingish type area out here. That takes you all the way into this 111-ish type area, and that's all the way back from October 27th, 2015. So the number that you want to be watching, the question there, though, was, what are my charts saying for long entry points on Gilead? So, knowing that, so let's at this stage here, let's hope for a failure inside of Gilead, and then that would say, let's go look at our market profiles here. Let's go look at what our daily and our weekly say. Now, in the weekly case here, this says you've got resistance slightly overhead at 95.10. That becomes a fairly key resistance level. The actual entry point into Gilead, as it turns out, really was right around the all the way back here, probably in the trading day of about February 11th, as Gilead had cleared the its daily profile that had formed back then was right around the weekly point of control. And you can see all that taking place right here on February the 11th. So that price point, by the way, is right around the, where was that? Right around the 86.29-ish type area. Would that still be a level of an entry point out here? It would. Let's assume that it's not. Let's not assume anything. If it doesn't get back down to that level, where would be the next area? I would say, to give you the exact number as we speak right now, 138. What I would do is I would take. I'm going to do the math in my head. Try to do the math in my head. So 40 cents, 8.38. That would be 91.38 to be sort of exact. Your price point for the next entry point, if you want to take a long in Gilead, would be $91.38 as of 1:38 p.m. on Turnaround Tuesday. Steve Rhodes with TFNN. We'll be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's up about 8. S&P is up 3. So the second question was Marathon Petroleum. MPC is the ticker symbol. So as we take a look at Marathon Petroleum, by the way, let me restate. I think I said 91.38, 90.38, 90.38 is the entry point today in Gilead. That way it will definitely change a little bit tomorrow. But that is the range here with regard to your entry point into Gilead on any kind of a pullback. Now, in the case of Marathon Petroleum, the number is 37.62. Right now it is trading out at 38.77. So if this were to pull back to about 37.62, not to be exact, but to be exact out there, that would be one of your buy areas. Another buy area and even a further pullback or deeper pullback would be about the 36.32. So 36.32 to 37.62 would actually be the number out here. Now we can see in the case of Marathon, we can see that it's above all forms of resistance, horizontal resistance, if we take a look at our TAS market profile. So where is it that Marathon Petroleum is headed to? And that becomes an excellent question. At this stage here, what I would definitely do is look at my retracement levels. So let's go see if we can do that. Now, my retracement levels, I'm coming from the retracement off of December 2nd's high all the way down here to the low. Looks like that occurred on February 9th. So the next stop inside of Marathon Petroleum ought to be about the 40.99 level, and then it should make its way off into about the 48.24 area, the 0.68 retracement. So things look good here. And when we take a look at Marathon Petroleum, I will assume that it too kind of moves in the directional direction. How about that out there? But it moves in a similar direction to light sweet crude out there. So it would be very poor of me to go ahead and give out a target entry point and where Marathon Petroleum may be going to without taking look at the light sweet crude. And I would never do that to you out there. So let's go take a look at light sweet crude and try to get a feel for what it is doing out here. And as we take a look at it, we'll take a look at this first chart. You're going to say this is another bullish message for the market, directionally speaking, right? We said that there is we know that there is an absolute directional correlation as we speak right now with regard to the direction of the markets and the direction of light sweet crude. I haven't updated for yesterday and today, actually last week as well. I'll go ahead and update those charts. But here's what it is that we do know. We do know in the case of light sweet crude, now I've got the continuous contract up on my screen, so I've got the data so I can do a number of things. But one of the things we wanted to look at was the low here from February 11th. And as we do our counts, our wave counts here to the upside, back here on the trading session of March 18th into Friday, what the light sweet crude had done was it had made a higher high and got into that 7th inning stretch session out there, that wave of G. And today it's taken that out. And when you typically take out those 7th waves out there, it says, hey, you were not tired at all. There was no reason to take a rest, and it's time to move to the upside. Looks like 42.55 or so is the 200 period exponential moving average out there. So that may be a bit of resistance, but this actually bodes pretty well. Now, as I recall, we had a target of around $43 in the case of light sweet crude. Let's go take a look at the current contract, which is down 20 cents, trading at 41.32 out here. Let's go see what this might provide us with as far as information. Let's get rid of those retracement levels out there because those are not needed as we speak. Here what we can see is on Friday, price ran right into resistance of that weekly TAS market profile. So that really becomes the hurdle that light sweet crude is going to have to overcome. But because how did that work? That's not right. That can't be right. So we're using that continuous contract didn't work for us with regard to that. Well, let's bleep that out because it has not taken out Friday's highs out here. How can I do this? Let me see here. Okay, here we've got the April contract up on my screen. So that would be helpful if we were trading it, but we're trading May, and I don't know that I've got that updated. So give me a moment here. Let me see if I can find May. Son of a gun. Hate to start something like that with you folks. I don't have it up here. I don't know if I'll be able to do it during the next break, just simply the way that it breaks down on my system. Needless to say out here, we'll just go ahead and we'll reverse it for a moment. We'll say it still looks pretty darn good out here, but light sweet crude needs to get above, we'll call right now the best thing that we can, 42.53. We see light sweet crude getting above 42.53 out there. That's another reason for the markets to actually move higher out there. But Marathon Petroleum, the numbers that we looked at, those were good and solid numbers out there. Okay, what else should we look at? What else do we want to look at? We've kind of covered commodities, gold, silver, so to speak. You at least know my viewpoint on that, which is the viewpoint of the smart money, the big money. You may be wondering who was buying this morning and who was selling this morning when it came to gold. The sellers were the big money, the commercial traders out there. They were just like watching Trading Places, right? You got the those characters out there, Lewis and Billy Ray, or I think those are the characters out there, right? Just like they're sitting there at the orange juice pits, okay? And those were the guys that were just selling. They were just going ahead and selling, and who was buying were all the individual traders out there. That is what has been consistent with regard to the CFTC COT data. I suspect that today was nothing more than that as well, because many people, their fingers on the trigger points are like, hey, the got a terrorist attack, the markets are going to go down, let's go jump on the short side, let's go long metals, because that's the obvious trade out there. And clearly the obvious trade is not really the trade that we should be looking at. We should be taking a look at the trade that actually works more often than not. Now let's go take a look at some of these things here that are moving individual stocks. I don't have any other questions that I see from an email standpoint. Let's just go take a look at a few things. What's behind the move here in Sherwin-Williams? Why is this? Oh, this is the Valspar out here. So that's their deal with regard to an acquisition. So that's why they're moving. But how about Chipotle, CMG? That's not in an acquisition mode that we know of. It's up $8. It's up 3%. It's trading out at 281. So let's go try to figure out where this thing is moving into. And this right now, I don't know why I've got all those red lines out there, red lines in the sand, but we're going to go ahead and get rid of them. Now, in the case of Chipotle, brand new market profile. Let's just go ahead and refresh the screen that formed today. So Chipotle ought to have some support at today's low, that being the price point of about $459.65. Chipotle now ought to, if it can clear $475.14, if it can get above that, you ought to see a move to the $495 to the $514 level inside of Chipotle. Not a whole lot there that is of significance, just really moving sideways here at these lows. The pullback here recently, it didn't test a swing point, unfortunately, for those looking for a bottom style refresher. So we don't have any kind of what we do have here at this stage of the game is we do see the beginnings of a series of higher lows out here and higher highs inside of Chipotle. And so long as it doesn't move down below 435.87, then you're seeing, the beginnings of the formation, perhaps, of a bottom. Not even perhaps. You're seeing the beginnings of a formation of a bottom inside of Chipotle. Dow's up 10, S&P's up 3. Be right back.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Commodity Solution CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar, in one powerful CD. With annual pricing caps of 70% per component, you could earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The April 14th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Dow's up 13, S&P is up 4. Something else to be watching today would be the VIX index out here, volatility index. It traded down to a low that matched 2 days ago, traded down to 1375. If we go take a look at that chart out here, let's take a look at it. So you can see here a little doji candle back on March the 18th. The low there was 1375. The low today, 1375 as well. You get to 1374. It doesn't have to close there. Just has to trade to that level. And if you get down to 1374, by breaking that little doji there, that would say to me that the market just simply continues to move higher. Drift higher, run higher, just simply continues to move. If it does not take that level out, then that says that, okay, maybe that is not the case. Maybe this is the beginning of a shorter-term top out here. So watch the VIX today. 1375 is the exact number. You get 1374. That becomes more bullish for the market than where the VIX is trading at as we speak right now. With regard to some other things that are moving inside the market, let's go take a look at a couple of things. The downside price line, interesting chart pattern out here. This is the one that is trading the lowest dollar-wise out here. So maybe taking a bit of a hit. I don't know what their exposure is to Brussels, but just the whole idea, just the whole fear thing that is out here. So it would make sense that they're having a bit of a hit. Now, what the positive? Let's look at the bullish and the bearish side here for Priceline. First, with regard to what has Priceline been doing, let's do this here. It's easier if we turn things on and off one at a time, makes it easier. So here's what we know about Priceline. Number one, had a nice big old downdraft. This is based on the November 9th move to the downside, which was with 2.6 million shares. Price has come back into that area, into that level. The bottom of which, by the way, is at 1303.44. Come on, let me see here. So we're taking a look at in essence, the gap down. We're looking at both the bottom and the top of that. We can see that as price moved into that area, was way less than 2.6 million shares. 649, 490, 383, 536, right? So nowhere near that kind of volume. Now, as price moved down this morning, here, and as it's trading right now at 1314, got down to a low of 1306, real close to that high volume downdraft on November the 9th. So what does this tell us? Does it say that there's some support there? Maybe. But right now, the way that it's actually trading, the way that it looks to me, if Priceline closes today, nice run here, certainly off of the lows from February. But if it closes below, as we speak right now, I'll call it, see if I can get this math right, 1341. Is that right? Yeah. 1341 and 86 cents, 85 cents. So 1341.85, and you're trading right now at 1314. If you close below that, that suggests lower prices. Now, where would lower prices likely take us to? Well, I'd have to say this huge gap, this huge breakaway. The first level that it would likely take Priceline to is right here before released information at 1220.15. Big gap. Big sign of strength out here, right? 2.3 million shares on that trading day. Now let's come back and let's go ahead and get rid of that line and the one that I just accidentally put there. Let's go take a look at our market profiles. Let's go see what they have to say. In the case of Priceline, you've got a brand new daily profile. That says if you close today below 1309.35, you should anticipate lower prices. So again, you close below, we'll call it that 1309.35 level. Your first move down inside of Priceline, and I would anticipate that this is what's likely to happen. You're looking at that 1220.15 area to perhaps 1164.01. So, folks, have a terrific Tuesday. It's a great day lineup, a great lineup here at TFNN. We got our man, our polar bear, David White. He's up next. The Tom O'Brien Show from 3 to 5, and Andy Heck to take it on home. Have a great Tuesday. Look forward to seeing you on wonderful Wednesday, folks. Take care.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, accurate effective trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.